Fraud losses and scams can feel incredibly personal. Phishing and spoofing median losses last year doubled per person from 1,000 to over 2,000. Phishing specifically tops the list from the National Consumers League, and the investment scams, number three in that list, caused a median loss of around 30,000 per person. Crypto scams, primarily attributed to state actors, target vulnerable and mainly elderly citizens with an average loss of $62,000 per victim. Industry leader and professor at Georgia State David Mamet writes that fraudsters are now performing due diligence on consumers to see how much credit they can take out in your name or your business's name, prioritizing easy and lucrative targets. First-party fraud alone topped $100 billion last year for U.S. companies, accounting for 36% of all reported fraud, and continues to increase. TransUnion reports that in 2025, U.S. companies lost an average of nearly 10% of equivalent revenue to fraud, a 46% increase over 2024 and 27% above global averages. With the amount of fraud continuing to explode, especially in the US, this can both feel scary as well as overwhelming. But there are many people fighting fraud on the front lines every day at banks and credit unions. And with industry groups and support services helping better fight fraud every day, we're going to hear from a few of these leaders in just a second here. Today's NFO Growth Garage offers perspectives from both fintechs as well as financial institutions, addressing the stigma of fraud that's keeping FIs from better collaborating, and also talking through what's working and what isn't working in terms of tools and processes. You'll hear from a couple of industry leaders, like I mentioned, with each with unique perspectives on how well our broader financial services ecosystem is fighting fraud, but more importantly, where banks, credit unions, and fintechs really need to focus next. As we talked through the panelists, I'm just going to go ahead and jump in and get started. Let's begin today's webinar with perspectives from the front line with two industry leaders who fight fraud every day and help protect businesses and consumers. Willie Danieli of Ameris Bank and Andrea Valentin of Old National Bank. Let's start with Andrea. Andrea is
Yeah,
thank you for joining us, both the Chief Risk Officer at Old Glory Bank as well as the President of the Financial Fraud Consortium. You've basically seen the gamut of everything in banking and fintech. Can you tell us why we really reached a pivotal moment where fraud, especially fraud committed against American consumers, has really started to explode this past year?
absolutely. I really think what's fundamentally changed is that fraud's not just up, it's that the entire model has shifted, right? So we've moved from where fraud was opportunistic before to now what I call orchestrated, coordinated, and industrialized fraud. So today, the bad actors don't need to be experts. They can buy everything they need. If you think about identity, scripts, toolkits, they're on Telegram trading secrets, writing playbooks against us, and even scripts on how to get coaching on how to execute scams has become scalable in a way that we've never seen before. I love the numbers that you shared, Chris, and just kind of as we look at what the FTC posted for 2025, it's up to 15.9 billion in fraud. And that doesn't tell the whole story because we all know that scams and fraud is underreported because there's this stigma that prevents people from going out and telling people. So fraud.org published late last year that they think it's really closer to 195 billion annually. So we're not just talking about incremental growth. We're talking about real-time payments, massive data breaches. If anybody thinks that their information isn't out there, you're probably a little delusional. There's been so many data breaches of even our major credit reporting agencies that it's very likely that your information's out there. And then we've got AI on top of that now making scams more believable. It's really just shifted the economics. So it's now faster, cheaper, and easier to execute fraud than it's ever been before. So that's why I think it's such a pivotal moment.
Wow. I mean, that's an incredible set of statistics, even that you shared as well. So, if we dig in a little bit deeper, can you talk a little bit about what types of fraud you're really seeing most at Old Glory Bank?
Absolutely. It's been more about, it used to be stealing identities. So identity theft used to be what we were fighting against. Now it's about manipulating behavior. So ultimately, we have authorized push payment scams where the customer is tricked into sending the money themselves, right? And so they actually had a part in it. And so working with them on those situations is very, very tricky. And then the hard problem comes in when we're looking at because the transactions look legitimate. We have mule accounts coming in and for new accounts, right? We don't have any idea if they're here for good or for bad, right? And so in the end, it becomes a very difficult kind of dance that you have to do where you have to look at still account takeover, which is traditional fraud. And we're looking at synthetic identity fraud, but then there's the mule networks, right? Which is really what is very kind of the infrastructure behind how the fraudsters are attacking us. So really, if I just had to simply say it, I'd say fraudsters are just pretending to be our customer now. They're not just pretending now, they're coaching our customers in real time. So how do you fight against that?
It's crazy. I wrote an article about a year ago, Money Mule, Horse's Ass, or My Little Phony, that actually does kind of expose that a little bit as well. And it's almost like the Chase ATM TikTok hack, which was basically just writing bad checks. And I think Chase recently sued each of those customers for something north of $500,000 right. So it's crazy in terms of the amount of coaching that individuals are going through, but they're facing different pressures economically as well. And so that could be driving them to it. It doesn't matter. Fraud is illegal and needs to be stopped, hands down. As we talked about, though, some banks and credit unions feel a stigma with sharing fraud with each other and really coordinating. Clearly the fraudsters don't. They're hosting like their pizza parties, training each other, get-togethers, right? Maybe they have their kids over and talk about fraud and teach them fraud too. I don't know, but they're doing it. Why aren't we?
Yeah. And I think we are doing it. I've seen a big shift in the industry recently, but I also was just recently at the Safeguard conference on AI. And I came to the realization that it's really, we need to partner with all types of people in the industry. So as I was talking with folks, I had the opportunity to sit with a lady from Adobe, and it's just incredible what she shared. When you look at how consumers are falling for these scams where they're saying you can purchase a small, an Adobe product and it's discount, you get it for $10. It's usually $29.99. Well, what they're actually doing is giving away all of their information. And so as banks, we don't realize that. These things are happening a lot of time way upstream and these consumers. And the consumers are coming to us as bankers saying, help me, right? So the bottom line is fraud isn't a competitive issue. We've got to work together. It's a shared systemic risk. So it's becoming more sophisticated. So we're really going to try to focus on this as we're moving into the rest of 2026 as we talk with our financial fraud consortium partners. First, we've got to normalize fraud. Just because you have fraud doesn't mean you're weak. I can't tell you how many times I've had conversations where a community banker says, I don't do any of those risky things, right? But it's coming your way, right? And then we have to create some safe environments to share intelligence openly. And so there are things like consortiums or this NFO Growth Garage where we can do that. And then the third thing is speed, because if we don't act quickly, they're going to eat our breakfast, right? So, from a mindset standpoint, the way that I think about it is we're not exposing our weakness when we're sharing these types of things. You're actually strengthening the entire ecosystem because one of us is not going to be as smart as all of us.
Yeah. Awesome. I love that advice. I love hearing that. Let's shift now. Thank you very much, Andrea. Let's shift now over to Willie Daniely. Willie, you've been in financial services over 25 years, much of it fighting fraud for several larger regional sized banks. And if anyone has seen just about everything in fraud, it's you. You're well connected with your industry peers. Your perspective, I think, is really critical for us, especially for a fintech audience. And I'd love to understand what types of fraud at Ameris Bank that you are really seeing and combating and helping your teams to overcome.
Yeah, thanks, Chris. I'm sorry. Are you getting an echo?
We're getting a bit of an echo.
How about now?
Okay, you got it.
Thanks, Chris. Thanks for the intro. We've seen a tremendous uptick in BEC fraud as well as spoofing events. And believe it or not, good old-fashioned check fraud still exists. So putting things in place are really important, and we'll talk a little bit about some of the tools and techniques we use a little bit later.
Okay, let's actually jump into tools. So I'm interested. I know we have a pretty wide audience on today's Growth Garage webinar, and for the recording, folks are going to be interested to hear the kinds of tools that you use. Clearly, you're not going to share the super specifics because that's where the secret sauce is, and you don't want to give too much away. But if you could talk about the kinds of things that you're seeing some successes in, and maybe some of the things that are more up and coming as well.
Yeah, I'm so sorry for the echo.
That's
Um,
okay. Let's keep going.
that's okay. All right. So Chris, that's really cool. We are using cutting edge technology, starting to really dig deep into the machine learning process. Um, Initially in our organization, other organizations like mine, AI, machine learning, bots were a dirty word. But retooling skill sets to shift folks into other roles so that, the bot does the heavy lifting and we're truly investigating. That was a huge shift for us, not only culturally, but from a technology standpoint. Secondly, it's really interesting. We've shifted from the protect the bank model to now protect the bank and the client. When I say that, it's unfortunate, and I think Andrea said it best. We're all victims every day. It's not if, it's when. So we changed our approach. We take more of an empathetic approach when we're dealing with our clients when they incur fraud. That can be on the consumer side, but on the business side as well. We walk through things like police reports, IC3 form submissions, and recoveries. I'll tell you, the hardest conversations that we have really are around recoveries and will clients get their money back. We try to be as transparent as possible. We walk the clients through the steps and what they may see. But we also keep them in the loop as the recovery efforts go on. Unfortunately, in our industry, we approach things like recoveries and indemnification agreements different ways. So, we always keep the client engaged as we're walking through that process.
Wow. Oh, it's awesome to hear that you do dig in and take that empathy to heart, even if consumers or businesses can fall victim to fraud and scams and basically just get tricked out of their funds. What would you say your teams are really doing? I know you mentioned machine learning, but on the people side, right? Meaning human in the loop or other training and other types of things. What are your teams specifically doing to better handle the accelerating pace of fraud? Because we do see fraud increasing every day.
Yeah, that's a great question. What we've done in the last few years is we've focused on specialized investigations. So we've created silos in which the investigators become subject matter experts. So they're better equipped to help the line through whether it's a large scale event or one consumer issue. Things that we weren't focusing solely on 3 or 4 years ago, like loan fraud, identity theft, as well as PPP and P2P transactions. These were all things that we weren't specifically focused in on from an investigation standpoint, but we've now created these silos where our investigators are subject matter experts. They understand the documentation, they understand the business, which it makes us better equipped to actually defend our bank and our clients from fraud events.
Awesome. And what would you say that you'd like to share with some of your other fellow bank and credit union attendees that are out in the audience? What would you share to help them feel more comfortable with sharing either tools, techniques, or other fraud type stories with each
Yeah,
other in
great
order to better
question.
combat fraud?
A great question. I'll say this is a public service announcement. Stop using US mail. Mail theft is crazy in our industry right now. But I will say that there are tools that we utilize to help there. Also, I'll keep a tight pulse on the vendors. We have in the fraud world, we have a core set of vendors that we've always used. But in the last 2 years, there are some very cool startups that are doing some really special things that we haven't seen in the traditional companies that we used for fraud and risk review processes. But last but not least, constant training. Keep the teams up to speed. We do a weekly touch point, and I will tell you the information that we share in those weekly touch points change as the week goes on. So the fraudsters aren't sleeping. They have access to dark web information, Discord, other platforms to share information. So we try to be as ahead of the curve as we can. Unfortunately, I talk to my investigators and I ask them to think like a thief, which is really important in this world that we're in. You have to kind of take on the mindset of a thief, but also balancing it out. We use a term in my organization, fraud fatigue. And that's where an individual's constantly looking at information all day and they get snow blinders. So we like to pull people off, take a break, let's walk. But sitting in front of a PC 8 to 10 hours a day, risk reviewing items can be very stressful because not only do you have your client's fate at hand, you have your business, your bank's fate at hand. So that's really critical. So if you guys don't recognize fraud fatigue, please look it up and please work that into your daily rounds with your investigators.
Excellent perspective as we all help buoy each other to fight that good fight. So thank you, Willie, and thank you, Andrea, for sharing from the industry as well as the bank perspective. Now let's turn to our fintech panelists, Pam Carr, as well as Will Messina and Ashish Bhatia. We're going to talk through both a broader industry perspective as well as two of the larger areas between ACH and check fraud. Pam, let's start with you. From your prior experience heading IT at a bank to managing fintech investment firm at a major VC firm to being a Forbes contributor, more recently heading platform at Alloy Labs, you're really at the nexus of all things fintech. I know that you've written and spoken this year about fraud already, and you've got a great perspective. So, through the lens of financial institutions and consumers and the businesses that they serve, can you talk a little bit about the most common types of fraud and scams encountered in 2025 in the US? How are they really showing up at banks and credit unions? And what do you think that might lead to in 2026?
Yeah, I mean, I feel like our resident makers covered a lot of that, but I can give a little bit kind of higher level view on that too. But I think as Andrea alluded to, the barrier to entry for financial crimes and fraud has basically collapsed. I mean, you used to need a criminal network and who knows what, but now you need your MacBook and maybe a Claude subscription, and the network is now at your fingertips. I think I saw a stat when I was writing my last article about fraud that I think it was 45% more revenue loss due to fraud in 2025 than the year before. So clearly a substantial increase year over year, just with how sophisticated tools are getting and how easy it is to be a fraudster. So I'll start with, I think, our beaten dead horse problem, check fraud, which I think is kind of what Willie might be alluding to with the mail theft and those types of things. But it continues to be a very fast growing type of fraud. It's an easy one, especially with checks still going out and checks being so easy to either wash, or now we have check cooking, which I'm sure we've all seen on LinkedIn, the fake checks that have been kind of going around, and they look very convincing. You just need some generative AI and you have a very convincing looking counterfeit check. So I think banks that are still relying on their like very traditional, legacy imaging systems will stay super exposed to that type of fraud. And then again, as Andrea mentioned, the social engineering, so like the push payments on the bank side, those are going to look completely legitimate. And I think more and more the frontline people have been trained, is this, a person over a certain age? Are they transacting some giant wire or something that just looks like it shouldn't be? So, we have that kind of frontline fraud defense of, do you know this person? Is this a legitimate transaction? Having those types of conversations and trying to really hopefully sometimes talk the person out of that social engineering scam that might be going on. But I think it's hard for the bank to then kind of deal with that too, because the customer authorized it. So, we have AI voice cloning and deep fakes and fake executive impersonations and emails and just about everything else. And I think the social engineering has just gotten so frighteningly convincing. Even at some recent fintech event I went to, they had a video that they recorded and they had a deep fake, and I'm pretty sure most people thought that the deep fake was the real video. It was that convincing. So I think, just with that, and I think, the pig butchering, the social engineering, continuing to attack the most vulnerable folks, and just that like feeling of, oh, it's a very urgent, stressful problem, and I think a lot of people are struggling financially right now. So sometimes that makes you take actions very quickly because you're just under so much stress, and that really puts the banks in kind of a complicated spot too. Of yes, the customer was scammed and this was a fraud, but also they went ahead and said, yes, let's do this. So, just trying to find that balance is I think becoming more and more complicated. But I think just as we go, through the rest of 2026, first of all, God knows what else is going to come out there in terms of tools wise. It's going to enable people to commit fraud. I think that is growing faster than the tools that we have to fight fraud. But I think, again, like the industrialization in general of fraud, and our residents banks touched on this, but you can get packaged tools and that expertise just at the click of a button. So I think just even the most low skilled attackers can run some pretty sophisticated schemes now, whereas before it would be big secret financial fraud networks. So you really don't have to be that like technical type of criminal anymore. And then I'm not sure if we touched on this already, but I think first party fraud, so like customers fraudulently claiming that their transaction was not authorized, and for whatever reason. But I think that continues to be on the rise in my eyes. One, because of the easiness that we have to now dispute transactions, and two, I think just the state of the economy overall. Lots of people are in financial kind of binds, and what is the easier way to save some money than go ahead and say, oh yeah, I did not make that $25 Starbucks purchase. And it might seem like a small thing, but I think the more disconnect we have there of what is really fraud versus what is someone saying is fraud, or what is someone technically was fraud, but they said, let's go ahead and do it. It's just a very, I think, gray, murky area, and not really kind of what fraud and, financial crime laws and rules were set up for, 20, 30, 40 years ago. We've moved much beyond what the controls, I think, can handle at this point.
A recent Cornerstone Advisors report, what's going on in fraud in 2026. I know Ron Shevlin was the author for that one, along with another contributor from Cornerstone. Really talks and dives into first party fraud and how that's just exploding as well. And it goes into the reasons why, but again, it doesn't matter. Don't do it, right? But I think that the key though that it alludes to, and what you were alluding to just a few minutes ago, really alludes to liability. Liability, it's a really difficult topic, and that's probably to a lack of clarity in the minds of businesses and consumers. Who's really responsible? As a financial institution, if you see a consumer moving a wire, you're going to ask them, hey, are you being pig butchered? And they might ask, do what? And not really understand what that means. So are you part counselor? Are you part psychologist? Are you part fraud expert at a bank now? That's a challenging one. But liability, I think it really gets to the heart of it. Who's responsible for covering the cost of fraud? Are people really just out on their own? What are your thoughts in terms of where liability sits? And maybe if we just kind of look at case by case on the most common types of fraud, starting with debit fraud, check fraud, and ACH fraud.
Yeah, I think, like I said, it's just become so murky. I think the fraud has become so complicated that the rules, I think, were not written for the world that we're in right now. So I will do my best to try to see where the liability might lie. But I think for example, on the debt and consumer transaction side, we have Reg E that protects consumers. If you're reporting within a certain amount of time, your liability gets capped. But I think, obviously that law is pretty favorable to consumers, as it should be. But again, in that same situation, like consumer negligence will not override that protection cap. So, if somebody's handed over their credentials or go ahead and authorize this transaction that they shouldn't have authorized, then Reg E is not really going to protect you in the same way. So I think in that, it's kind of like for straightforward transactions, yes, the consumers have real protection, but for this gray, murky area of I was scammed, where does the liability lie? I think that still stays a pretty gray area. Like, how much should the bank be responsible for versus how much should the consumer be responsible for? I think both sides have a very strong opinion on which is which. And yeah, so maybe, what needs to happen is we need to have some sort of bank fraud insurance that we now pitch into for our parents. I don't know, but we'll figure this out at some point, I think. But go ahead.
I was going to say, if we could get into that just a little bit, that is a really interesting idea because I was going to ask if you were a fintech founder looking into fighting fraud, what kinds of things would you suggest? Would that be one of the things that you would suggest as a fintech founder?
It could be. That was just a random idea that I just threw out there off the top of my head. But maybe that's something that comes out as a new consumer financial protection law. Of now we have baked into our, deposit insurance, it is also fraud insurance. And maybe that's kind of the next era of how do we protect both the bank and the consumers from this type of fraud of, the bank doesn't want to be responsible for it because the customer authorized it. The customer was scammed, and now they're, your grandmother might have lost her life savings or her whole retirement. And I've seen that happen just with personal friends of mine that the family's going through this. So, how do we protect our families and ourselves from those types of things? Maybe it is something like that,
Interesting.
So yes, that part I think is just so gray and murky. And then for ACH, I think for businesses particularly, there's a little less protection on this side. I think if the business has not reviewed their statements in a certain amount of time and given some sort of notice to the bank, I think the business then absorbs the loss. And I think the new NACHA rules kind of modify this in some sort of way or another. I'm not going to say I'm a policy expert, but look into that and look into the legal liability allocations on that.
Yeah.
But I think it creates a more like documented compliance standard. So I think if your institution has weak ACH fraud monitoring now, then it's an exam finding, and regulators might treat this more as a safety and soundness issue rather than like a operational issue. So I think that shifts the liability a little bit. I think check fraud is maybe the most complicated. I think I think the altered fake AI generated checks are going to be treated a little bit differently versus actual check fraud, which, what do we want to call that? Maybe, somebody writing a check and then claiming, oh no, that wasn't actually me. Again, this whole first party fraud, I think, who's really going to bear the brunt of the risk here? I think the drawers typically bear more risk for the counterfeit than if their account security practices were poor. So I think there's just like a comparative negligence element there too. So, if your controls are weak, you're sharing the loss. But this is another space where speed matters because of just deadlines when you can say something was a fraud or when you could try to challenge a transaction. So banks have to act within a certain time period. I believe it's like the end of next banking day. Don't quote me on that either. My banking laws are murky since I've left the industry. But again, if you miss that window, you've taken the loss. So I think I just want to get back to my point of, our liability framework was really created for a different era. And now we're in this new generation of types of scams and frauds. It's not just, somebody coming in saying, oh, my debit card was stolen or my credit card was stolen and I didn't make any of these transactions. It's kind of psychologically changed a little bit. So I think it's funny that you said, are we now psychologists? I think we all kind of are, because we have to think, is this a true instance of fraud? Is this person frauding us? what kind of went through and happened in this whole investigation of things like the pig butchering. I think, it's more complicated than just, did someone steal your credit card and now we have to reverse and, credit you back this money. So I think it's just gotten too complicated for us to operate in the way that we are right now.
In a complicated world, it's only getting more complicated. I could not agree more. Thank you, Pam. Luckily, we have two experts on ACH and check fraud. So let's turn now to Will Messina. Will is co-founder and CEO of fintech payment platform GrailPay, a platform that uses an embedded machine learning risk analysis infrastructure to safeguard ACH payments. You have firsthand perspective on fraud vectors facing ACH platforms. I'm excited to hear your perspective. In 2025, ACH had a total volume of around 35 billion transactions with worth about $93 trillion. That continues to grow, especially in business-to-business payments. Therefore, ACH fraud, it's a major threat, especially to businesses. And while there's a number of inherent systems and process controls used by FIs and providers, we're still seeing an increase in this type of fraud on ACH, impacting small businesses more severely. For reference, nearly half of Americans, or just under 62 million people in the US, work for a small business. So, that being said, why were the fraud protections in place previously with ACH payments not enough, leading you to found your own fintech designed to secure such a common payments channel?
Yeah, I mean, what we're kind of seeing is like the way, I guess like two dynamics are generally at play. Like one, more and more payments are moving to like lower trust payment environments, generally being like some sort of digital intermediary kind of having a play in terms of how payments are being done. So think of like the rise of like vertical SaaS platforms over the past 5, 10 years, accounts receivable platforms, account payable platforms, like the level of manual interference in a transaction is moving way to more of an automated kind of system in terms of like third party platforms are starting to manage payments at a significantly larger scale than they maybe did 10 years ago. Now, like over the next couple of years, like what starts to happen when agents start to manage treasury flows on behalf of these businesses and agents don't know who two counterparties are, it starts to get pretty dicey to start to move money from point A to point B if you don't even know if the account or routing number on the other side of transaction is actually real. The second thing we're kind of seeing is the advent of instant payments start to be fairly meaningful, or at least if not instant, faster payments. Just more generally, the demand of businesses are starting to like move more towards it. And so historically, the way that risk has been managed over ACH has been ACH is generally known as like fairly slow. It's T plus four business day kind of payment rail, but that's fairly artificial, right? And the reason being is because it's a batch based kind of payment system where I move money Monday, I might not know until Thursday morning, and if the bank account was real, open, active, they had money in it, etc. So the best way to manage risk is just to wait, right? And so when we're moving to a world where like demands of businesses are like, you look at PayPal, you look at Venmo, you look at card payments, and then you have ACH payments still owning a pretty decent chunk, if not largest chunk of payments volume still in America that acts on a batch based 4-day kind of payment system. That's not really aligned. And so like the question is, how do you start to have some level of insight, start to allow for some instantaneous decision before I actually move money?
Yeah, that's really interesting. I know that we've seen some new Nacha rules come into play, and while they're not addressing the instant and real time, which let's come back to that, because no institution wants just to enable the ability to commit fraud faster, which again, a lot of them are waiting to implement those faster payments until we can come up with more real time. But let's talk a little bit about the recent changes in Nacha rules. Do the recent Nacha rule changes on fraud monitoring requirements for the ODFIs and RDFIs go far enough, in your opinion, to have a substantial impact on reducing fraud? I'm going to paraphrase. All ODFIs and most RDFIs must implement risk-based processes and procedures reasonably intended to identify ACH entries initiated due to fraud.
Yeah, I mean, the standard up till now, web debit for consumer, ACH debits was like 5, 6 years ago, and the standard was commercially reasonable. And commercially reasonable is intentionally fairly vague in terms of what commercially reasonable. It's eye of the beholder kind of thing.
Yeah.
I think this makes it a little more strict. I think a couple dynamics are at play. I think not just what was happening with Zelle and lots of the public scrutiny as it relates to lots of Zelle fraud. And, we had a new payment system with Zelle grow extremely quickly, and it's extremely successful. And honestly, it's a really good payment system, but at the same time, opened up a sort of whole new vector of risk at play, right? If I send $1,000 instantly, send it to you, Chris, and then turns out I'm not sending it to Chris, I'm sending it to Tom. Tom now has $1,000 of my money, and that got
Yeah.
a lot of public scrutiny grew over that. And so Nacha, I think, was being fairly preemptive and proactive to say, well, we think this dynamic is only going to continue to grow. And I think they think it's going to continue to be more relevant for ACH. Therefore, it's relevant to be proactive as it relates to, ruling to say, FIs and the originators that work with those FIs should have some sort of tooling in place to actually manage risk. Now, at the end of the day, in theory, if I'm a financial institution or I'm an originator of payments, I should be thinking about these things regardless, because there should still be a business need to either not have losses or to offer a better experience for my customers, whether that's operationally or faster payments, whatever it may be. And so in theory, uh, you should be doing some of these net new fraud controls, sort of however you define them anyways. And I think Nacha intentionally left fraud controls as a little bit vague. And I think it'll take probably 18 to 24 months to kind of shore up what kind of standards flow into it, what those fraud controls actually are. But I think it's like a necessary next step of if you're not doing this already, it's good to have a standard that you could start to look to actually start to implement fraud controls for this payment rail.
Hands down. I mean, you've got to be able to make payments safer for consumers and businesses, again, primarily for businesses, because 93 trillion is nothing to sneeze at in terms of the amount of money movement in the US, only growing. So let's take a deeper dive into your own platform. I know it is one example of how to secure ACH payments. How does your platform actually secure payments? What makes it effective? And then how do you go beyond that to provide training on what to look for, how to spot fraud, and help the institutions just better cope?
Yeah. So, I mean, briefly on us, we've aggregated a lot of data on, say, account and routing numbers. Fairly, historically that data has been fairly fragmented. Open banking's great when you can get access to it, primarily in consumer use cases. On SMB use cases, it's fairly tough to have someone in accounts payable ask for credentialed access to the bank account to make a $2,000 payment. So therefore, the majority of B2B payments still is over account and routing numbers. And so, what we've done is aggregate data from check processors, lenders, payment companies, financial institutions. Say this account and routing number is real. It's owned by Will. He has a history of good payments, bad payments, et cetera. Therefore, you should or should not do business with this bank account. As it relates to what we tend to recommend, just more broadly as it relates to what we see is this is only one piece of the picture, right? Knowing who you're sending money to or collecting money from is obviously we think important, but potentially even more important is sort of to what Andrea was saying earlier is what happens prior to actually moving money, right? What is the funnel to actually acquire a customer, right? If I am going to fraudster.com and advertising my new bank, right, and saying open up a checking account with my new bank at fraudster.com, you're probably going to get a bunch of fraudsters signing up for my new bank, right? And so sort of being intentional as it relates to how we kind of think about customer acquisition, sort of to what I was saying before, because customer acquisition now is moving to more and more lower trust payment environments, especially with digital account opening, for example. Say I may have never actually met this person on the other side of the transaction, and I may have acquired this customer on a website that I've never actually even been on. And therefore, how do I actually underwrite that net new customer and allow them to access financial services through me. I would say like that's probably the most important thing that we see. And the partners that we work with that manage risk best are pretty intentional about how they think about customer acquisition on the front end.
Yeah, that's interesting. The KYC of if you've got somebody using a deep fake, if you've got somebody using a synthetic ID or either a created or a curated ID, maybe with details that they've gotten from the dark web, right? All of these things together can make it a very, very challenging environment when you want to create a frictionless experience for onboarding onto your banking platform. It's a real challenge, especially for community banks. Okay, at this point, I think I'm going to move over to Ashish Bhatia, our final panelist. Ashish, you've been in banking and payments, primarily check processing for over 30 years, including how checks are processed not just in the US, but also internationally, including the United Kingdom, Canada, and you've also seen it in South America. During that time, you've been with Alligent, my own company as well, with Alligent as well. You've been with Alligent, I think, closer to 15 years, partnering closely with Alligent's CEO, Didi Wakefield, who was recently named to Mitek's 25 Women to Watch in Fraud Prevention. Ashish, as we know, and I think as Pam mentioned, as Andrea mentioned, as Willie mentioned, as everybody mentioned, check volumes continue to decline, but fraud continues to spike. $8 trillion in payments last year, primarily with businesses writing checks, moving those in the US. It still makes fraud a potentially lucrative target for fraudsters, checks a lucrative target. Traditional check fraud, like just writing bad checks, check hiding, is reported as declining in 2026, though. And check alterations and counterfeit checks, also as Pam mentioned, are both seeing a huge increase, according to a recent survey of banks and credit unions. Can you talk to us a little bit about how fraudsters are exploiting this payments platform's check processing that over 90% of businesses use, but few FIs really have a true modern automated AI control-based approach today?
Yeah, sure. Thank you. So, the majority of the platforms that are in production today, and I think Pam also mentioned get this when she was talking about what she's been seeing, is that these are legacy platforms get designed in the 90s and went through a refresh, right, when Check 21 came out, and it was thing then spread across to get remote capture. So all of these platforms are really, from a design perspective, geared to processing checks when it was the bag and drag. You walked into the branch and deposited the check there. The check remained there, and the check remained with the teller. The teller then gave it to the courier. Courier brought it into the central processing location, right? So, but with capture can now being spread across, can not only within the banks or the credit unions own thing network, it's also thing on the device that everyone has in their pocket today. But the back-end processing cannot catching up or has not caught up to the way that people are making use of that payment platform in terms of depositing checks through mobile or depositing it through ATM. And the biggest thing is checks have not been the system that people have really cared about. It's got its own XCC and everything, lots of safeguards around it. But just given getting that the majority of the customers or the members of the credit union have moved away from using checks, focus cannot been on there, and that's what's provided fraudsters the platform thing, as well as getting the opportunity to exploit it. And that's what really needs to change, right? We can always sit back and say, oh, checks are so antiquated, and why are we still making use of them? Yep, that's one way of looking at it. But the other way to look at it is that the small businesses that are coming up, which are a majority of where checks are still in use, do not have a better way of managing putting the cash flow, and all of giving the systems that are out there for managing billing and payments and so on and so forth are things still geared around your net 30, net 60, net 90, and so on and so forth, which really make checks the best option for them to make their payments with. So till such time that we don't graduate and change the front end where these payments are being managed, thing as well as initiated, checks are going to stay. And there are pitfalls. Like was mentioned, is that the postal service is a big contributor to it, absolutely. But then we have to, as a total industry, can take a look at how do we safeguard the customers and members, think that still make use of checks, right?
Yeah, complaining about checks is like driving around a 1974 Oldsmobile and complaining about the gas mileage. I mean, you do have the opportunity to buy a newer car. I'm just saying, right? So if your system is old, you have the opportunity to buy something new. Let's talk a little bit about what some of the newer AI evaluations look like in securing checks.
Yeah.
Pam, I think you mentioned, I think Willie and Andrea mentioned as well, it's really hard to tell the difference. Pam, you talked about this. If you look at AI, like an AI generated image of a check versus an actual real check, the human eye, it's really hard to tell. In fact, I'm going to wager to say very soon it will be impossible to tell for the human eye. So what do we do? Ashish, what would you suggest that institutions do instead?
Yeah, so there are plenty of, or at least two or three that come to mind right away, vendors that are in this space that have what thing incorporated AI thing into their solutions to really combat it and check it, put a check on identifying these forgeries and counterfeits, right? Check kiting and all of that has gone out of the window, so to say. So what it was typically, the traditional ways of I think check fraud, I think no longer there. It's counterfeits, forgeries, check washing, and so on and so forth. So yes, it is think time to look at how to incorporate them into the workflows. But then also you have to look at the other thing is that I think if anybody remembers CPCS as the old IBM system, right? They built a wonderful system, but they also built a lot of hangers on, or third parties came in and someone built the balancing module, someone did this. The same thing is happening, at least from my perspective, in this industry right now, is that we have a lot of point solutions that are, I think, capable of detecting fraudulent items and counterfeits and so on and so forth. But they all have the own consoles, they have their own systems, they have their own reporting. So what happens in that case is the check goes out of the processing system, goes into another system, and the two don't talk to each other. So what happens there is, you have identified it, but if somehow the check comes back in again, in another form, there's no way to tie that information back, and there's a delay in identifying it. And that could be also true for any other payment type, right? If it's being initiated somewhere else, yes, it may be being detected through the back end as being fraudulent. But if that information is not being passed back to where it came from, then you've lost a lot of data. So what you really need to look at is, okay, how do I reduce? And Willie spoke about this, is that the fraud fatigue, right? You'll have people looking at 3-4 different consoles, 3-4 different screens, reports, and so on and so forth. At some point, why can't everything be brought together into one console? And that's what you need to look at from the perspective of reducing that fatigue, as well as keeping all of that information together, rather than it being scattered across the number of systems that you may have in production.
Sounds very actionable at the FI level. Any call outs, kind of final thoughts from you on either Allegent's 2026 check fraud benchmark report or the Fed's more recent 2026 Federal Reserve Risk Officer Survey report?
If for as long as I've been working in this industry, it was the first time that people are actually willing to talk about check fraud. So that's the first thing step. I think the fact that I think banks and credit unions are really talking about check fraud, and the fact that I think regardless of us wishing that checks can no longer there, they're going to be here for quite some time. So the fact that they work responses to our survey, I think is a plus. And at least get that to me. And I could go into a lot of things, but I mean, that to me was the biggest putting takeaway for me is that banks and credit unions are willing to talk about it now.
If you don't talk about it, you can sweep it under the rug and pretend that it doesn't exist. I agree. Okay, at this point, we're going to move to our audience Q&A portion of our webinar. And then after that, we're going to finish with some closing comments and a quick lightning round from our panelists. So moderator, if you could please open up the audience Q&A. We'll see if we've got any questions for the panelists.
Yep, and everyone should have access to the chat feature. So feel free to write it there.
Okay, while we're waiting for a few questions to come in, any other, Andrea, I'm gonna see if you've got any specific items that you may have seen recently that you would like to talk about in terms of the House of Fraud, which is an industry association that you helped to co-found.
Yeah, definitely. I'll just share that we're not alone. Everybody in the industry is having the same problems. So if we're talking to each other, they can be more effective. I shared that quite a bit. The thing is, the fraud moves from one organization to another. So if we are aware of what's out there in the industry, then we can use our tools to fight against it. But the most important thing that we can do, I think, one of the panelists said this, is we have to make sure that our teams and the people that are on the front lines are taking care of themselves first, because otherwise nothing's going to work, right? You start missing signals, and it's just really just not a great situation. So take care of yourselves is my message to those bankers out there today.
Hands down. Not seeing any questions coming up in the chat yet. Let's just keep going. So thank you, Andrea, for some awesome recommendations. I would also love to hear, I'm going to go around the room too, from the other panelists on what they would suggest both fintechs as well as banks and credit unions can be doing in 2026. And feel free to toss out, just like Pam did, any nugget ideas for any founders that might be listening in as well. Ashish, let's start with you then, and then we'll move on to the other panelists on specific recommendations, again, focused on 2026.
Yeah, thanks. I won't take up too much time, but piggyback on what was just said is that just because you as a financial institution haven't faced fraud yet, I mean, it's something that is waiting around the corner. So rather than waiting and seeing how badly you can be hit, I think it's time to take into consideration as to based on what some of the other financial institutions have been facing. Take stock of what you have in terms of preventing, I think, check fraud from happening within your financial institution.
Love it. Thanks for that. Will, next up.
We've been seeing a lot of interesting AI native compliance and fraud review companies coming up that are it's a relatively new market, but I think what we've been seeing is risk teams at financial institutions start to move much faster and just have a lot more context and information as it relates to review, just by nature of what these agents are able to aggregate together.
Interesting. Interesting new vector. And I think to Willie's and Andrea's point earlier, make sure that you vet them properly. Speaking of Willie, you are up next.
Yeah, so if I said anything, it would be one, peel back the layers. If you're not digging into the dark web, start today. Because you're a financial institution, your customers' information's out there. Tricky part of that is to let someone know that their information is on the dark web, and how do you have that proactive conversation with the client that may not be technically savvy. So I would say dig into that as fast as possible. And I think everybody said the same thing. Don't sleep on check fraud. It's one of the easiest, quickest vehicles that the fraudsters do, and how they parcel that work out for part-time fraudsters is becoming an issue as well. So, the dialogue between branches and banks are really important. And I would just tell you, our banks that aren't cooperating with other banks when they need information, please do. We're not competing with each other. We're all a fraud family.
Awesome. Awesome. Pam, bring us home. The top recommendations from your perspective for 2026 for how to give fraud the FU, the FinTech uppercut.
I love this. I love the funds. I think I am just pro all things Andrew is doing and the consortium models. I think fintech should lean into that. I think the banks should lean into that. I think we should all be doing it together. Clearly the fraudsters are on Signal and Telegram, etc. So maybe we need our own anti-fraud signal